There it is. Hello, hello, hello. This is Mirella Kaell, your location gal, and you're on my podcast, Fire Chat with Mirella. Welcome. Well, today I have a really, really special guest for you. It's another mystery guest, and you won't believe all these things this lady does. It's unbelievable, and she will give us some wonderful tips on real estate investing, which is absolutely fabulous. So I'm going to tell you a little bit about her first before I reveal who my guest actually is. So take a listen to this. So Nancy started her investment career at the age of, get this, 26, right? Purchasing a 5-unit Victorian in San Francisco. She fell in love with real estate and continued to expand her investments. She has owned single-family rentals and small and large multifamily buildings and mobile home parks for over 30 years. Nancy is an attorney. Also, she owned and operated 𝒾𝓕 Associates, a law firm in Menlo Park, California, for over 25 years before retiring in 2013. Nancy is also a certified public accountant and real estate broker. Since retiring from the practice of law, Nancy formed Primary Home Solutions, which is, through which she purchases and renovates single-family homes. She is also the founder of 23rd Street Investors, a real estate syndication company. Wow, right? This is amazing. I am so starstruck right now, even though I do know Nancy for a little time, and we will maybe say a couple of things about that. So I am thrilled to introduce to you Nancy 𝒾𝓕. She's on my show. I can't believe it.
It's a pleasure to be here.
I am so excited to have you on. Well, we've known each other for a couple of years.
A few.
Yeah, a few. We met in when we both danced for 𝒾𝓕𝓁, a Polish folk dance group in San Francisco, which we are still connected through, kind of, right? Absolutely.
Correct.
Yeah. Remind me real quick, where is your Polish background from? On which side of the family?
My mother.
Your mom. Yeah. Okay. Wonderful. And I have to add, though, that besides all these wonderful things that you are doing, like a Wonder Woman, you have 3 beautiful daughters.
Yep. And 3 grandkids.
And 3 grandkids. Congratulations. My God. Yeah. It's amazing. So Nancy, it's so fun to have you on the show, first of all. And I know that how long have you been doing the 23rd Street Investors business?
About 4 years. I mean, most of the time I was investing on my own. And so about 4 years ago, I got into the syndication end of it, where I'm bringing other investors in to invest alongside me.
Okay.
Instead of just doing it all myself.
Okay, wonderful. And so you primarily work with investments in the Bay Area, or is it also outside of the Bay Area?
I don't do these investments in California at all. So it's usually the Southeast, Southeast, Southwest. We try to invest where it's landlord friendly.
Right. And that there's some cash flow left over.
Exactly.
You invest. Absolutely. Okay. So fantastic. This is very, very intriguing and interesting. And so can you give us like a quick overview of what it means, what it is? What is the syndicate? What is that?
Syndications are where the investors or the principal people find an investment. In my case, apartment buildings. And then we find investors that want to invest with us. We bring them in as limited partners, which means once they put their money in, they just sit back and it's a passive investment. They don't have to worry about the tenants or contractors or anything. We do all the work. And then we usually hold the investments for about 5 years. And then at the end of that time, we, sell it. And during that time period, the passive investors will get some cash flow, and then at the end, they'll get part of the profits.
Okay, wonderful. And so I know that, telling people what the return on investment is, maybe it's too general because it probably depends on each investment. But like in general, can you give us an idea what the return could be?
When we are underwriting a deal, and we underwrite a lot of deals, and we say no a lot more than we say yes,
Good.
but we're targeting to double people's money within 5 years.
Wow.
And so that equates to usually, around 18 to 20% internal rate of return.
Wow, that's amazing, right? Especially since, I mean, being a landlord, it's not a fun thing, I've only gotten to do it for a very short time on like one room, and so it wasn't actually a bad thing, but in the long run, if you have multiple units, I can see how, that can be difficult. And especially in California, you guys that don't deal with California, I'm not surprised, right?
Yeah.
So, tell me, what is the difference between active and passive investing in your?
So active investing is like when you go out and you buy a single family home and you work with the contractors, you fix it up, you put a tenant in, and then you manage it,
Okay.
for however long you want. And you deal with repairs, you deal with contractors, you deal with the tenants, you deal with the lenders, you deal with escrow, you handle everything. That's being an active investor. A passive investor is where, there's an opportunity that comes along, you review the paperwork on it. If it fits with your goals, then you put your money in and you sit back and get cash flow. We call it mailbox money. And you don't have to deal with any of the problems of running a property.
Right, exactly. Okay. Now tell me, Nancy, what, in your opinion, is better to invest in single family homes or multi-family units?
Well, I mean, obviously now I think it's multifamily. I had a lot of single family homes over the years. And one of the issues is that, you have a bad tenant. Let's say they don't pay rent and it takes you 6 months to get them out, or they cause damage. It can wipe out all of your profits, excuse me, all of your profits for the year. Where with multifamily, you've got a 100-unit building, you have one bad tenant, that doesn't pay rent, you still have, 99 units that are paying rent.
Yeah, so you have that
So,
leverage, definitely, right, with multiple units.
sure. And your property management cost is less. If you have several houses and you hire a property manager, you're going to pay them more than what I would pay percentage wise for a large unit.
Right, right. So, do you hire like management companies to manage these units, or do
Of
you?
course,
Yeah,
we have
so
professional management companies. We have an on-site
yeah.
manager. We usually have on-site maintenance people, and then we have a regional management company that handles everything for us.
Now, are these guys actually, do they work for you guys, or are they third party companies?
They're independent. They work for a number of,
Right,
apartment building owners.
owners, and you, but you vet them, I'm sure, for you.
Well, not only vet them, but a lot of times they're handling numerous buildings for us in that area.
Ah, okay, wonderful. So, where, in your opinion, right now is the best place to invest?
Well, I wouldn't invest in California. With the numbers just don't work very well because things are too expensive. And it's not a very landlord friendly state. It's very difficult to get tenants out. During COVID, a lot of tenants weren't paying rent.
Yeah.
We didn't have that problem in our buildings. And, it's difficult to say that one place is better than another. What we look for are areas that have job growth, that have population growth, that have low crime statistics, and, that are landlord friendly.
Right. Okay, gotcha. Okay. Now, our market here is pretty tight right now, as far as, availability of properties. And not only that, it's pretty much nationwide, right? So it's a similar problem with the low inventory. So do you find that a big challenge right now to find these units, or is it on the multiple unit side, is it a little bit easier to find these investments?
Well, multifamily buildings are different than single family, because single family people are buying things to live in, not necessarily as investments. Nobody's buying a 100-unit apartment building to live in it, and the values are based on the rental income,
Right.
as opposed to single family, which is based on emotion. A lot of times.
So yes.
Yeah, and with
Which is good on
multifamily,
that.
yeah, exactly. But
Yeah.
with multifamily, you just, run the numbers and, if it works, it works. And over the last several years, it's been very difficult to get buildings. And they, were going up in value, rents were increasing, so the properties were increasing. Now it's become a little bit better, especially since the interest rates have gone up. It's making it a little easier to find places.
Well, yeah, because it's a very different set of criteria, right? When you're buying an income property like this, like you said, it's based not on a personal credit or a person's credit. It's based actually on the income that this property brings in and the expenses and
Exactly.
so it's very different. So yeah, so would you say now, because the climate, it's kind of good and bad, right? Because people are afraid a little bit. They've heard about the banking issues, and so they're a little jittery, right? We have some buyers that were a little bit jittery, that with the stock market going up and down, these rates kind of fluctuating, but now they're coming back, as far as what we can see, kind of coming back from the sidelines. So actually we're seeing multiple offers again and a lot of activity in our open houses here locally. So I wonder, because it doesn't seem like it's really affecting people in a way that maybe the news was, right? They always portray this as the end of the world, and we know that this situation is very different from the recessionary times that we faced in the 2008s and 2010s. The unemployment was crazy through the roof back then. People lost their jobs, they lost everything. It was really, really dire. Now we have layoffs in the tech industry. They're still happening. I was just talking to one of my clients yesterday who works for Facebook, but people are forgetting, and I was like checking with him on this, because I said, they did overhire a little bit, in the last couple of years, right? They were hiring a lot of people, they were doing a lot. And yeah, so that was the case. And so they're kind of leveling this off right now, So what is your opinion? What do you think with the banking? Is that going to affect the market? I know we don't have a crystal ball, but what is your projection for this year and next year? How is the real estate market going to look?
Oh, give me a crystal ball.
I know we don't have it. But,
the reality is people were afraid of the interest rates, and what I know several people who wanted to buy a house when the interest rates were in the, high 4s, low 5s. And this one person, they were in escrow, and within 1 week, the bank raised the interest rates to over 6. So they couldn't qualify anymore. So I think what you're finding are people are still needing housing. They're having to look at less expensive homes, so that they can qualify for a loan. But that doesn't mean that there's a lot of inventory out there, which is why I think that you're seeing, multiple offers.
Yeah, we definitely don't have enough inventory. And, well, one of the reasons is that people are sitting on a lot of equity this time, and also they have those low rates, right? That they got used to. And everyone forgot that not so long ago, the rates actually were 5s and 4s, until they got the crazy 2s and 3s. And I mean, and you and I remember them being like 9 and,
I remember them being 16 and 17.
Exactly. So,
and people were still buying houses then, and 5 points. I mean, it was just crazy. I never thought I'd see interest rates below 10.
I know, it's ridiculous. So things change, of course, nothing's perfect, but I mean, they have stabilized a little bit more. And the thing is, though, we have, if you have a good lender, like, they come up with all kinds of different ways to address it. And there's ways to buy down the rate, and there's actually ways to help the sellers and the buyers in this. So if a seller is, stuck because they're thinking, oh, if I go buy another house, I'm going to have to pay this big rate now, I'm sitting on a nice rate. Well, there is a way to deal with that, and I always tell people, like, first of all, you have to be ready. Buyers have to be ready, pre-approved fully, no prequel. You have to be really ready to go, when that house comes up, because everyone else is going to be, who's really serious. And there's a lot of competition. But, so would you say that because, people are throwing these questions out there, and some people are letting that fear, control them, right? And they're like, oh, well, the banking's not good. Is this a good time to buy? Is this a good time to invest? Is this a good time to invest in real estate, in your opinion?
The best time to invest in real estate was 10 years ago or
Okay.
20 years ago. The second best time is now.
Hindsight 2020.
You can't really go wrong with real estate. Unlike the stock market, it's a real asset.
It's a
If you're
tangible.
buying in California, in general, it has always gone up.
Right.
It may, go like this.
Yeah, but over time,
over time, it's going to go up.
Yeah. The trajectory is always going up. So
right.
Of course it has to adjust. I mean, every 10 years things adjust, it's like we've been around long enough.
Yeah.
You've seen it adjust,
I've seen it adjust a number of times, but it still goes up. So, the best time to invest in real estate is as soon as you can.
Okay, wonderful. So tell me, how can people reach out to you, or how can they find more information?
So my company, as you mentioned earlier, is 23rd Street Investors.
Mm-hmm.
And if you go to 23rdstreetinvestors.com/webinar, I have a webinar that explains exactly what we do, how it works. We go through some of our past deals, to show what type of projections we're working with, what we were able to return to investors. And, it talks about all the tax benefits and, other benefits of investing in multifamily apartments.
Wow. Okay. So it sounds like it's covered. If they want to find out anything from, and I'm sure they can contact you. Is there an email they can send you an email, or?
Sure. Nancy@23rdstreetinvestors.com.
Okay. Wonderful. Okay.
Yeah. And what we do is we talk to people about investing, and if it's a fit, then you become a member of our investor club. And when we have deals, then we advertise those to our investors, and you can decide to invest or not. There's never any pressure to invest. There's no cost to join our club. It's just a way to become aware of investments that are out there.
Okay. And so are your investors also part owners? Is this like a kind of a...
Well, technically, as a limited partner, you're part owner in the company that owns the property. Right. Correct.
Okay.
And so you get the tax benefits as well. Those flow through to you.
That's important too, right? And you're a CPA, so you can say that. I can't really, but you can. That's awesome. Yeah, wow. This is really, really interesting. And I think a lot of people may find that it's a good vehicle for them, right? Because of this lack of time and pressure and having to own your own multi-unit building, which a lot of, like, even if I have buyers who are like first-time home buyers and they're looking at something that's more of maybe a deal to begin with, but then it's like, you guys don't even have time to see these houses. Like, how are you going to run a project to renovate this, and actually, maybe you'll save a little money, and then you uncover that you need $250,000 of work, put in to fix something, and you're going to be back in the same square one, so would you recommend that sometimes, when people are starting to invest in real estate and they don't necessarily need a house, to buy a house at first, would it be a good idea to start with something like this to invest?
That's
And
the way I did it. I had investment properties long before I bought my own house to live
sounds
in.
like it, yeah. So because now I've heard this, over and over again, that actually, that it's not necessarily a great way to go into that big mortgage first, and so a lot of these stories are, hey, maybe get a duplex, right, when you have just 2 units, and if you have to live in one, rent the other one, right?
That's a real common way that people get into real estate.
Right. But I mean, these syndicates are, this is like an ideal situation, because really you don't have to deal with so much, and you still are partly you own an asset that exists out there, instead of
Exactly.
the stock market, which is so intangible, right? It's just there, and God knows we've seen it go up and down like crazy. So
Well, and you don't get any tax benefits investing in the stock market.
Right? Yeah, exactly. So that's great. Okay. What else is going on, Nancy? Where are the grandkids?
My grandkids are in Tucson.
Oh,
Unfortunately, they're not local.
are they all in Tucson, or?
Yeah, my oldest daughter has 3 children. Yeah.
Oh my goodness.
She has
Wow.
3 under 3.
3 under 3, God bless her. How is
Yeah.
she doing that? That's crazy, right?
Very busy.
We have 3 between us, me and my husband. So I have 2 from Peter, Peter, my son. So they're in Vegas. And then we have Asher from my stepson, who, he's been part of my life since he was 5 years old. So he's my other kid, basically. And so Asher is now got 19 months. And then Emily and Jack are 5 and 4. So they're just, a little, how they are, right? We're proud Baptias.
Yep.
Like the apple of our eyes. I mean, isn't that amazing though? Look at how time flies. Can you believe we're talking about our grandkids here right now?
No, I cannot believe it.
And we were just goofing off not too long ago, dancing and having a good time, right? That was fun though. Those years were fun. And I hope that we have something coming up, maybe some kind of a reunion.
Well, a few years from now. Yep.
Yeah, maybe we can put Mary Kay up to that. Something. Well, Nancy, it's so nice to have you. Oh, okay, I got a little warning here. Okie doke. So that was so nice to have you. Are you still there?
I am still here, and
wonderful.
thank you very much. It was a
You're
pleasure
welcome.
and always good to see you.
Of course, always good to see you too. I'm gonna upload it, send you a link so you can have access to it, as well as probably in a couple of days I'll have it ready. Thanks,
All right.
Nancy. Have a great day, and
You
I'll talk to
too.
you soon. Ciao.
Bye.